Welcome back to the channel. As always, please remember that this information is for the educational purposes only. And if you're copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, today's stock is called TRUP, ticker TRUP, currently trading at $33.50. This is a position I have been looking to enter. It has gone up significantly, as you can see today. That's why I haven't been filled, but it is my intention to enter this as soon as possible because tomorrow they will be reporting earnings. And aside that, as a catalyst, I came across the stock looking to go long insurance companies. So whilst there are insurance companies out there with ambitious earnings growth projections, I discarded most of them because their beta is quite low. And because of that, they're likely not good for an options play. Now, with this company, on the other hand, we have a 1.75 beta, and at the same time, Coifin is showing short interest here of 31%. But if we go to shortsqueeze.com, you can see that the data that we're getting from this platform is that the short percentage float is more than 40%. So this shows that there's a very, very high level of consensus here in the investment community, can lead us to a dangerous situation for a short squeeze. So the ratio 19 days to cover, that's somewhere in dangerous territory. Now, we are sitting currently at a multi-year resistance level. And as you see, we have now crossed. So we had a bit of a hint here, but we crossed the 250-day moving average. So if you see where we're sitting, 33, you can see that this was a resistance back in August, back in December, and we go back in time even more. You see that it was in April a key level, and you can see that it was also a key level in 2020 and before. So that suggests that can pick up quite a bit of a punch. And that's why I am looking to enter this. I mean, it's 9% today in anticipation of earnings. I put the order on, but I was just in fill because the prices keep going up and up. So I'm likely gonna explore other avenues to get exposure to this. But why do I wanna get exposure? Well, I had a look at the options chain, and there is a high open interest at the $40 mark. So that provides us with decent room for move. And when you look at the volatility of these options, some of them are between 70 and 80%. So the market is expecting a big move. Now the problem with this one is that the spreads are a little bit wide. So that's the reason why I haven't been able to enter just yet. But you know, that's not an excuse for me to be sloppy and piss out the premium that I'm going to be paying. Now the stock is currently trading, and as you can see here, at more than 400 next 12 months earnings, and obviously that is a crazy valuation. Having said that, the reason why this is because this is a company that has a pretty low EPS. So because of that, I have used as a reference here, price to sales. Yeah, price to sales for the next 12 months. And we get 1.2. Actually, when I checked earlier today, it was 1.1. But my thesis here is that this stock can get to the 1.5 level. Where we are in terms of price to sales at the moment is an all-time low. So I think there's room for the company to move to this level. And why is that? Well, the financials for this company are all about revenue, okay? This is a 1.4 billion company with their requirement to grow their top line in order for them to achieve that operational scale that they need. Essentially, they are a pet insurance company. Okay, so the financials, they're all about top line, and that has doubled in 3 years, which is pretty impressive. Now, the number that may worry us a little bit is this one, right? The bottom line, the earnings. That's the area where they have struggled because even though the top line is increasing, their EBITDA and net income are shrinking at a faster rate, whilst also capex is growing. Having said that, they have bullish EPS growth for the next 2 years, which would bring to the company at a small loss. And it's not unusual to see companies that are still at a loss trading at sometimes, a price of 100, 200, or sometimes even more. So not particularly concerned about that. Now, for the earnings, they missed most of the earnings since summer 2021, which we can see here. So we go back, you see 2020, 2022 period, pretty bad for them. But here's where we start seeing the fundamentals starting. So they beat earnings last quarter, and I do think that the company is doing a pretty good job in terms of managing the business. So this is something that they've discussed in their earnings goals. They have an interesting team in place. They have increased their prices in order to pass the cost on to the consumer, and the majority of customers have decided to stay with them. So at present, the retention percentage of customers is very high. Now, remember that this is a company that pays no dividend, so we're looking at a growth name. And the way that the analyst community is looking at this, they have a consensus target price of $45. So we can see here that $45 somewhere around here. There's plenty of margin together, so we're kind of asking for a big move. But the options expires that I'm looking at are in August. So I'm looking to do a calendar on a ratio, August and short the May chain. So if tomorrow is a great result and they go there, I make money. If we get there after May, I make a shitload of money. That's always good. Um, so we have to also look at what the sector is doing because there have been rising costs in the industry, right? And we have to have a look at what competitors are doing. Here is a snapshot that you can see. So this is essentially comparison in terms of valuation. As you can see, we are kind of like bridging the gap compared to the others. This stock, again, is the one that is the most shorted, so is the most likely to rise in terms of going for a short squeeze, and at the same time, it's the second stock with the highest beta. So I think can uh, pick up a bit of a punch. And in terms of return, uh, still, this is something that surprised me quite a bit when I saw it. So still below the competitors and below the index that we have here, PAWS, that's the pet care index. But the interesting thing is that it's still performing better than Lemonade, which is the one with the highest beta, and was created by Chewy, one of the pet care brands as well. So I think we could see the stock going back to the levels of returns that the peer was seeing in the past. Moving on, uh, we have their team looking to further increase the rates that they charge for the services. So that's something that in the United States has to be approved by their states. So, for example, if you ask for or if you propose increases in California, the state has to approve for that. And that, I think, is the biggest risk that we could see potentially in this trade. So, for example, with Florida, they asked for almost a 50% price increase, and they didn't approve that, right? In California, they requested 28% increase, but it was only approved for 12%. I think that's the biggest risk that we can encounter with this trade. But overall, uh, if inflation subsides, that should not be a bit of a problem. So I'm getting into this as a bit of a pain trade, and also under the lens of a very optimistic scenario for my portfolio. So meaning that, yeah, inflation is going to go down, market's going to go up, and this is going to be a stock that is rising explosively. So that's the lens at which I'm looking at this. Um, in in terms of the losses, is something that we'll have to look at the earnings when they report tomorrow. But overall, Aflac, which acquired 9% of the company in a 200 million transaction, reiterated their support of the company back in December, which is good to see. And the balance sheet doesn't look loaded with liabilities either. So overall, the main issue for the company is going to be putting that bottom line in order, which is at the main drag for the time being. But in terms of growing the customers, reducing the cost of customer acquisition, they're doing all those things, and they are heading into the right direction. Uh, so if we look at, for example, the reviews on Trustpilot, they're very, very positive. And we also can see in the materials that they've provided that the total subscription revenue growth is increasing nicely and steadily, and so on the subscription revenue by cohort. Now, the operating margin, which is something to watch for, yes, took a bit of a downtick over the last couple of years, but it has been improving ever since. And so if tomorrow earnings come across well, maybe heading back into this trend again, I think that could be seen as very, very positive for this company. So that's all for this one. Make sure that you use an options play because very volatile stock. Happy trading and see you soon.